It's important to understand that there's never been a fiat currency that has survived over 100 years. And when did our fiat currency start, my friends? 1913. The Federal Reserve Bank is created and a fiat currency is rolled out. This is a level of power that would corrupt any man. Their only options are to raise taxes and risk revolt. So what do they do instead? A silent, invisible tax called inflation. The middle class isn't going to exist by 2030. Human history gives us endless examples of the fact that the human adoption aspects of innovation and change rarely happen gradually. And this is what we're about to see yet again. Behind the veil, things are being worked on, innovation is being pushed, but we don't see that. And it takes a technology getting to a certain point of mass adoption before literally overnight, everyone is interested in using it. We're not wired to think exponentially. And because we're not wired to think exponentially, we often miss exponential opportunities. If you doubled a penny every day for 31 days, how many pennies would you come out with? That is exponential. And that is what we're dealing with when we invest in innovation. So I want to ask you guys, are you prepared for a literal overnight shift? If not, that's what today's call is about. This is how we got here. So let's get into it. I want to give you guys a brief history of the United States dollar. Very high level overview. I don't know why I put 1911. That should be 1913. The Federal Reserve Bank is created. 1913. And a fiat currency is rolled out. Important date if you don't know it. 1913. That was the creation of a fiat, fake currency. 1945, we had the signing of the Bretton Woods Agreement. That was post-World War II. And the United States becomes the world's reserve currency. These two singular shifts created an environment in which the government, in combination with the Fed, government and the Fed kind of work together. The Fed is technically a private for-profit corporation, but I digress. The government can now expand and contract the money supply at will. That wasn't possible before 1913. Do you see the problem with that? If we have a set amount of money, let's say gold, or let's say Bitcoin, a set amount of money, right? There's only ever going to be 20 million, or there's only ever going to be 1 trillion ounces, or whatever it may be. You can't just expand the money supply. If you switch to a fiat currency, you can expand the money supply with the push of a button. And all of a sudden, most of the currency isn't even physical. It's technically just digital. It's numbers on a screen. So that's kind of what 1913 did. And then 1945 comes in, and we're now the world's reserve currency. And this is why world wars happen, just to let you guys know. All crimes are commercial. Everything is about commerce. Everything is about money. Ukraine, Palestine, I don't care what's going on in the world. It's about money. Don't shoot the messenger. I'm not involved in it. It just is what it is. Because whoever holds that world reserve currency status, all other countries have to hold their debt, and they have to denominate their currency in that currency. That's real power. That's real power. And so that happened in 1945. Now, this is a level of power that would corrupt any man. It would corrupt any man. So before you go to point the finger, you try putting yourself in that position, being handed that. And you're telling me over time you wouldn't rationalize and find ways to justify your own greed. And that is what has happened. It doesn't happen overnight. 1945, 1955, 1965, 1975, 1985. It takes time. But now we're in 2023. heading into 2024. And our dollar is worth 35 times less. This isn't in America. This is the United States dollar, but it affects the world. Because remember, wherever you're tuning in from, if you're in a different country, your country has to denominate your currency in United States dollars and has to buy United States debt. That's real power. That's why America is kind of the central, right? It may be different in the future, but when you are the world's reserve currency, you dictate the global economy. So 35 times less. And the only trick that the Federal Reserve has up their sleeve to stimulate the economy is to inflate the currency more. And the problem with that is the U.S. economy and U.S. citizens cannot survive any semblance of high interest rates anymore. Everything starts to crumble. Did you guys know that America used to thrive on 20% interest rates? 20%. Depending on your age, if you go ask your grandparents, they'll tell you what interest rates were when they bought a house. My grandpa bought a house when interest rates were over 15%. You ready for the kicker? It was way more affordable. It was way more affordable. So it seems like, we get sold this bill of goods that we keep interest rates low to stimulate the economy. Like it's better for you because you can get a house with XYZ low interest rate. But in reality, you're actually getting the short end of the stick because they've relied on that strategy for so long, the price is so damn inflated that even with those low interest rates, you're getting the losing end of that bargain. So let me show you guys. This is the Federal Reserve's website, the federal funds rate, okay? I'm showing you 1980 to 2023. Look, we were chilling around 10%, 1979 going into 1980. We get all the way up to about 18.5% interest rates in the 80s. 18.5. I want you to try to fathom that. Look at the economy right now and realize that we're at 5%. 5. What do you think happens at 10? Now, what changed? Why could we survive it here and even, still live a decent life? But here, we go up to 5 and we see a 75 to 90% drawdown in a lot of asset classes. Albeit not real estate, because that's propped up by BlackRock, State Street, Vanguard, and all that, kind of the Ponzi scheme of refinancing and the dollar and all that. Let me show you one more graph and then we'll get into it. 1984, same thing. So this is the same graph as this one, but just more zoomed in, less time frame. We were above 15%. Do you notice anything about this trend? Down, 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 right? We had a clear trend line right here. If you drew a straight line across, for those of you who know how to chart, you would see a downward channel, and then we broke this channel. What was causing this to go down, 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 down all those times? All these years, sorry. This is decades of money printing. This is decades of devaluing our currency. And here's how this works. You have two options when you are a for-profit corporation under the guise of being a nation, aka the United States. You're not a profitable company. You're bleeding cash. And you only really have one source of income, well, other than wars and tariffs. Your main source of income is taxing your people. Well, you can get up to a certain threshold, and when you try to go above that threshold, you risk revolution, revolt, and being overthrown. If you study history, this is very common. Case in point, let's say Boston Tea Party. I know it seems bananas if you're like a millennial like myself and you haven't studied history, you're like, that could never happen. Study history. Happens all the time. Their only options are to raise taxes and risk revolt, risk revolution, risk losing power, right? Because how many of us are there and how many of them are there? So what do they do instead? They use a silent tax, a silent, invisible tax called inflation. And what's crazy about these silent, invisible taxes is that most citizens are for it. They're in favor of it. They want them to devalue the currency because in the short term, the cookie tastes fucking good. So they pound cookies, pound cookies, pound cookies, and then before they know it, they've put on 25 pounds and they look in the mirror. It is an age-old story of if you make decisions based on short-term gratification, they're at the expense of the long-term. So it is not a pointing finger, they were being oppressed. We choose this shit. How many of you were rooting and cheering for a stimulus? It is what it is, right? People want that shit because they don't think this way. So they devalue. What does that do? That allows businesses to borrow super cheap debt. It's incredibly easy to start a business and get funding. You don't have to pay much interest on your repayments. So entrepreneurship can thrive, right? The business owner. The middle class loves it because their white picket fence, little 2,500 square foot house and car payment or two is low interest. So everything seems great because we don't think long term. But long term, the bill is due. And everyone went out the back door. No one wants to pay the bill. But the bill's due. You can't dine and dash your way out of this one. So now we're spiking back up. We're chilling at about 5% and things are, ready to break. And if you look back at history, 5% is mild. So something has changed. So let's break down inflation for you guys. Super simple. This 18-year downtrend, as I mentioned, in interest rates represents the Federal Reserve expanding the money supply. Does that make sense? So if you had a fixed pie before, they just increase the size of that pie over and over and over, which makes it seem like there's more money. But there's not, because over here, they're just making things cost more. See how that works? So they're really just reallocating. They're just moving the board around. They're not actually creating more money, because if you create 50% more money, but then you make everything else cost 50% more, you didn't create more money. It just, you created the illusion of more money. Welcome to the government. So they've been debasing our currency for decades. And once again, this would have never been possible if we didn't have a Federal Reserve Bank that was in charge of our money supply, private contracting with our government. So you sacrifice the future to make the short term easier on you. And rather than increasing taxes, you utilize the invisible tax that I talked about. Everyone's happy in the short term because without financial literacy, you can't see what's coming. That's the problem. It's what we refer to as second order consequences. So I want you guys to write this down unless you're already familiar with macroeconomics and how this stuff works. When this line goes down, aka interest rates, assets and wealth go up in the short term. And I'd say the midterm. But it's fake. It's like plastic surgery. You might get compliments, but you know damn well you didn't earn it. That's our economy. We have a plastic surgery economy. They don't want to work out. They don't want to eat healthy. They just want to get a Brazilian butt lift. That's our economy. We got a BBL economy. Quote me on that. And when this line goes up, assets and wealth get destroyed. Pretty simple, right? Now, that's not like a don't take take that to the bank blindly as your only rule and your only mental model in economics, but that is a very simple understanding of what inflation and interest rates do. It's why technical analysis hasn't been very important the last 2 years. It's why fundamental analysis hasn't been important the last 2 years. If you don't know what that means, don't worry about it. Because what's actually running the show that you can't really supersede is interest rates. It will make or break things. And paradoxically, the more that this line goes down, the more it inevitably has to go up in the future. And that's the situation that we're in. The bill is due. We got handed this bill of goods, especially if you're a millennial. You're just born into this shit. And they got to enjoy decades of easy money, prosperity, white picket fence, no repercussions. And now gas is $7. So that's where we're at. And when you study the fourth turning framework, that creates a specific archetype of person who grows up during that environment. And that archetype is me, and that is my purpose, and that is why I'm here. If I was born into, let's say I'm a trust fund baby, life is good, the economy's great, there's no struggle, I'm not who I am today. And so if you're in this situation, rather than pouting, view it as an opportunity to be the hero. Because it's not all doom and gloom by any means. The world is changing at an almost unfathomable pace. EVs, artificial intelligence, the Internet of Things, augmented reality, virtual reality, cyber wars, cryptocurrencies, digital money, the list goes on and on. And if you're like most people, you don't really have a clue about the gravity of the shifts that we're currently living through, let alone how to capitalize on these opportunities at hand. I don't want that to be the reality for you, which is why I spent dozens and dozens of hours creating our absolutely free wealth creation ebook that goes in depth into our investing thesis and the way that we see the world, and will give you a foundational education on how to start preparing you and your family for the shifts that are currently underway behind the scenes. In just a few years, the world is going to look unrecognizable, and I don't want you to be left behind. Check out the link in the description below to gain access. Much love. So I want to talk about the $46.2 trillion question. Can anyone tell me what the $46.2 trillion amount is referring to? What is valued at $46.2 trillion? That is the price of the United States Brazilian butt lift. No, I'm just kidding. That is the value of the United States stock market. So all of the value together, the United States stock market, $46.2 trillion. It's a lot of capital. So let's look at the same graph here. Interest rates, right? Now, if the Fed keeps raising to about right here, the economy will cease to exist. Just point blank period. We can't handle it anymore because they've debased, so things cost 35 times more. I want you to wrap your head around that. 35 times more to buy a house than 100 years ago, okay? Now tack on 10, 15, 20% interest rates. You can't do it. So things were cheaper back then. They hadn't been inflated to oblivion. So when you tack on a 10, 15% interest rate, it's not that bad because shit's pretty cheap relative to your earning capacity. But now the middle class can't buy a house anymore. If you do, it's small as hell. You can't have that many kids anymore. Can't have that many cars anymore. And how's your savings looking? So 10, 15% interest rates, that is devastating. And that's why I keep speaking to this notion. I'm not trying to spread doom and gloom. There are solutions, but we have to act differently. But I keep trying to educate people on the fact that the middle class isn't really going to exist by 2030. You're going to have the haves and the have-nots. And I didn't make the rules. Study The Rise and Fall of Civilization. Study Ray Dalio's work. Study the Fourth Turning Framework. These are my base macro foundations that a lot of my thesis come from. So if we get to, let's say 10, 15, we will experience a depression, and that will destroy even the elites. Why? Well, they rely on the stock market. I just said Vanguard, State Street, BlackRock own 88%. I want you to look up any company that you can think of off the top of your head. Type it into Yahoo Finance, go over to holders section and look at the top few holders, and you will not find a company where State Street, BlackRock, and Vanguard aren't in the top 5. If you find one, congrats, you found a fucking unicorn. You might want to research the company. Or it's just an absolute shit company. They're not interested in holding it. You played yourself. It's kind of crazy. So they rely on the stock market. They rely on the bond market. And then, of course, we all know BlackRock owns all the real estate, and they're owning even more, right? I bring this up because, in my opinion, this begs, well, before I get into that, in my opinion, they won't let that happen because it's a conflict of interest, right? They're interested in outcomes that wipe out the lower and middle class. They're not interested in outcomes that wipe everyone out. When you make the rules, if you get to write the rules to a game, would you ever create rules in which you were fucking yourself? Or would you create rules where you had an unfair advantage? Let's assume you're not a spiritually ascended human, right? Which would you do? Right? So it's pretty obvious. Yet the only way to get interest rates to come back down to this range, let's say 0.25, 3, 1.5, 2, a healthy range. The Fed's target, as they always say, is an average of 2% a year. But that looks more like an incredibly volatile heartbeat graph. Their only way to get rates to come down back into this kind of range is to start expanding the money supply again. Remember what I said about this chart coming down? How did they get it to slope down, 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 down? Well, they just kept the money printer on. Turn it off for a little bit, money printer back on. Just stimulate us to death. And this is why when you study fiat currencies and the cycles that I'm always talking about, 80 to 120 year cycles, it's important to understand that there's never been a fiat currency that has survived over about 100 years. And when did our fiat currency start, my friends? This is why I gave you dates. It's game time. We're not fucking around. This isn't a joke. This isn't a fantasy. This is information that only the smartest minds in the world are aware of and are positioned for. So they can either let things rise, let interest rates rise to a point where everything breaks, or they can start expanding the money supply again, inflate our currency even more, and get this line to come back down, taking on more debt, adding more debt to the United States' already bankrupt balance sheet. So those are our two options, guys. So that's where we are. Now, the rest of this call is going to be the good stuff, probably what you came for. We're going to talk about where we're going. And more than anything, we're going to show you guys a financial reality that unless you've been around the block for a while, unless you're financially independent, financially free, is really going to stretch your mind as to what is possible in the next 24 months. So let's talk about it. After this slide, I think you'll understand why I called this presentation Flipping a Switch. On the right, we have a long-term timeline of different technological advances in human history, starting in the 1800s. Obviously, this isn't everything, but this is definitely a cool graph if you've never seen it before. When you study enough history, one of the things that immediately jumps out at you is that mankind does not evolve linearly. We evolve exponentially. Electricity, for example, was not a thing until one day it was. The telephone was not a thing until one day it was. The internet and the computer were not quote unquote possible until one day they were. Human history gives us endless examples of the fact that the human adoption aspects of innovation and change rarely happen gradually. One day, we're all using candlelight for everything, right? Sun goes down, you got to light up your candles and carry it around on your little saucer. And then the next, all of a sudden, there's this thing called the light bulb. The hell is that? And we no longer need to rely on fire. Just like that. Now, I'm not trying to argue the semantics of like actual history and all that, just for the sake of what we're talking about, put that to the side. That is a huge jump that occurred essentially overnight. And this is what we're about to see yet again. What I'm talking about is this notion that things are always brewing behind the scenes, behind the veil. Things are being worked on. Innovation is being pushed. Things are being constantly iterated on. But we don't see that. And it takes a technology getting to a certain point of mass adoption before literally overnight, it's as if a switch gets flipped and all of a sudden everyone is interested in using it. So I want to clarify, I'm not trying to claim that innovation happens overnight. Obviously, it is an iterative process that might take years and years and years and building on top of people from the past's research and such. What I'm saying is that the adoption aspect does not happen linearly. And the reason I keep touching on this notion is because our brains think linearly. That's a problem. We're not wired to think exponentially. And because we're not wired to think exponentially, we often miss exponential opportunities. A simple example is if I asked you if you doubled a penny every day for 31 days, how many pennies would you come out with? Our brains aren't wired to calculate things like that. If I asked you to add up a penny a day for 31 days, oh, that's easy because that's a linear equation. But if I asked you to multiply, every day it doubles, right? So first day goes from 1 to 2, then 2 to 4, 4 to 8. After 31 days, anyone know the answer? I sure as hell can't calculate that. That is exponential. And that is what we're dealing with when we invest in innovation. Technology, disruptive innovation, cryptocurrency, that's what we're dealing with. And those are the basket of investments that we teach on. So I want to ask you guys, are you prepared for a literal overnight shift? If not, that's what today's call is about. We want you guys to be prepared. We want you to not be caught off guard. And we absolutely don't want you sitting here on the sidelines with FOMO trying to chase trends when you're coming about it from the wrong energetic. Bad things happen when you feel like you're quote unquote late to the party and you try to just rush into something. So let's talk about the 2030 vision. This might be the most important slide, the most eye-opening slide of this entire presentation. Hope you guys are with me. I talk about 2030 a lot. Round numbers are cool. There's also, we got the WEF, with the Great Reset and all that. We got Agenda 2030. And also there is a spiritual, astrological, and all of that merit to 10-year cycles and 100-year cycles. So 2030 is going to be an important year. Let's run through some math real quick. I'm a math guy. I don't like to sit up here and tell you guys about my intuitive feelings about the market. I like to show you the proof, right? Otherwise, this would be too much of a cult. Number one, the value of the global stock market is right around $97 trillion. You might want to write that down. The value of the gold and silver market is right around 13 trillion combined. And you know what the value of the Bitcoin market is right now? As you can see on this graph, right around 554, 553 fluctuates billion. So, let's do some simple math. If only 10% of the global stock market value gets reallocated from stocks to Bitcoin. Now that would be through a combination of companies starting to hold Bitcoin on their balance sheet instead of a depreciating asset like a fiat currency during a fourth turning. That would be a combination of institutions recommending a percentage of Bitcoin be held for all of their private clients. That would be the institutions themselves holding Bitcoin, which we're already seeing. And that would be things like Social Security, retirement funds, governments, Saudi money, trust funds, etc. In other words, institutional adoption. It's yet to happen. It hasn't been priced in. And that is why this is the opportunity of your lifetime. We weren't around when the internet took up. Well, maybe some of you. Maybe some of you were old enough to be investing and aware of this stuff when the internet became a thing and you could invest in it. I certainly was not. This is the first opportunity in our lifetime. So if 10%, which is pretty reasonable, gets reallocated from stocks to Bitcoin globally. And remember, the global piece is really important because how many of you have any idea of what's going on in places like El Salvador or Argentina? Do you see what's happening with the inflation of their currency? Their people are being forced to what? What are they using instead? So, in my opinion and in my research, the use case for Bitcoin is even stronger in other countries than it is in the US for now. But we're going to be doing the same thing. Because as your currency goes to shit and your government inflates you to death, there's only a few hedges against tyranny. So, if that were to happen, 10%, that's it, 10%. Bitcoin would grow 9.7 trillion in market cap. Hold that thought. Now let's look at gold and silver. Has been for the last, ever since 1933, when we went off the gold standard. Some say 1933, some say 1971. Gold and silver has always been a hedge against inflation. It has always been a really sound investment during times of chaos and war. And it's also an excellent store of value. Those are the things that it's used for. People don't invest in gold and silver because they're trying to become trillionaires. They invest in it to protect, to hedge from government misuse, from inflation, and from their wealth being stolen. Okay? So that same-minded person, if 10% of that market migrates and diversifies to holding Bitcoin instead, which is a lot more sustainable, especially if you're holding some significant size of metals, that's a hassle. You can't carry them across borders. You can't necessarily fly them in a plane. I mean, there's real limitations, right? I want you to think about a massive vault of gold bars and, war breaks out. What are you going to do about that? Right? That's real shit. Versus Bitcoin, okay, you got a little ledger. Cool. If 10% of them migrate, Bitcoin grows 1.3 trillion. Now, conveniently, if you add up 9.7 and 1.3, you get an even 11 trillion. This is an $11 trillion opportunity. Let's put it in perspective. For where we're at now in the market cap of Bitcoin, and I want to clarify, the reason I'm not speaking on crypto, I'm speaking on Bitcoin, is because institutions are scared to death of altcoins and cryptocurrency. They've deemed Bitcoin their little golden child. So they're down to hold Bitcoin on their balance sheet. God forbid they hold, an altcoin. It's too risky for them. So if both of those very conservative scenarios play out in the next, let's say, 6-ish years, Bitcoin can see a 21 times increase. A 21x, and I show it on the graph right here, where we are, up to 11.5 trillion, right? We're at 0.5 trillion. We would go up 11 to 11.5 trillion, just over a 2,000% ROI. Now, I want you to compare that to the S&P, to bonds, to CDs, to gold and silver, to anything, to your house that people think is an investment, to anything you've ever held. And I want you to compare the opportunities here. If that plays out, that puts Bitcoin at about $630,000 per Bitcoin. So, for those of you who are in the LUC, do you see why we've been really pushing each of you to do whatever you need to do to own at least one Bitcoin? Drop in chat if you own at least one Bitcoin at this point in time. How does that feel looking at this? It's easy to look at the chart, want it to go up tomorrow. Cool. Long-term mindset. Every Bitcoin you can get your hands on has a future value of, let's say, $600,000. Wealth is not complicated. It's 90% emotional. Now, if you're talking about options and leverage and all that, that can get complicated. But once again, if you study the 1%, you'll be hard-pressed to find any that got there through trading. They are investors, they are business owners, period.